How's it going? I'm Andrew with Investors Hub, and thank God it's Friday. Well, instead of doing our normal Friday recap, instead I'm going to have an interview for you guys. I'm actually still backlogged on interviews, which is a great problem to have, but I hate to let them sit in my pocket. So no market recap, and instead we're talking with Matthew Peterson, and he's from Peterson Capital Management, and we spoke to him a while ago, but he's been on the show before, and he's going to be talking to us about the state of the market and his thoughts on what's going on. And he's also going to share an interesting stock to watch. So yeah, let's hear from Matthew. Please note that our videos are not designed to be direct investing advice. We're here to gather the perspective of different investors. Our channel and our content should just be one stop on the journey of trying to find out where to put your money. So it's been a bloody couple of days in the market, though we saw some recovery today, but sort of dipped back down again into the afternoon. So why do you think this is happening? And is this the bottom and we're going up from here, or have we not seen the bottom?
Hi, thanks, Andrew. First of all, it's a pleasure to be back on your program. And, you know, I think it's very important in times like this that people focus on the long term. And these types of little bumps in the road should really be of no surprise at all. In fact, I wrote about recently in an annual letter that since 1850, so over 170 years, we've had 100 corrections, and a correction is a market downturn of 10% or more. So we have things like this every 20 months, and not consistently. We also have recessions. Okay, we've had 33 recessions over the same 170 years, so about once every 5 years. So, these things definitely don't impact me. They don't cause me any alarm whatsoever. We buy during dips and focus on the long-term growth of the businesses that we own. I think, your viewers would be wise to do the same. There's no way to time the market bottom. There's no way to say it's turning around tomorrow or the next day. There's so many factors in macroeconomic analysis, but things are booming. So this is a great time to be in the market and a great time to be buying.
So we got a pretty bad inflation report a couple of days ago, and you would expect that inflation would drive up the price of equities because the price of cash, or the value of cash, is going down. And yet we're seeing the opposite. Why is that?
That's correct in theory. So equities are a better place to be than, say, bonds or cash during times of inflation. But people actually they almost overreact. I wouldn't take too much. I wouldn't concern yourself too much with these sort of monthly reports that get extrapolated over a year. I do expect there to be inflation. We are stimulating the economy and trying actually to create some inflation. What people get afraid of is that interest rates are increased due to inflation. And then, basically, interest rates are to asset values like gravity is to matter. So if interest rates go up, it pulls down the price of assets. And so again, this is theoretically correct, but we are in such uncharted territories that if you look out over a little period, and nobody has a crystal ball, okay, but the Fed is likely to keep rates low despite inflation. So inflation will probably cause bumps in the road in the market, maybe create buying opportunities, but I don't expect rates to be increased in the short term at all. We're going to continue to stimulate but by the way, I will also add, there are a lot of this is a big debate right now. There are offsetting deflationary pressures going on. So things like technology, globalization, even US demographics are all deflationary. So I sort of anticipate us having some inflation over the short term as we stimulate, and then things will probably level off. So equities are a really great place to be. I'm not very afraid of these sort of inflationary headlines. I don't think that they're going to cause interest rates to move dramatically in the near term.
So I've been getting kind of a census of people's opinions. I've asked a couple of different people this same question. But do you believe in the old market adage of sell in May and go away? And if you do, what is it about the month of May that sort of facilitates that idea?
Okay, well, Andrew, I don't want to disappoint you, but the answer is no. This is nothing more than a nursery rhyme. So you know, it's very important to stick to the fundamentals. Timing the market truly does not work. It's not an effective method. So this kind of you want to buy into businesses where you truly understand the underlying nature of the business. So if you decide, if you think about investing in stocks like a business, you wouldn't sell your business because it's May, right? If you had the opportunity to sell your podcast, you wouldn't sell your podcast because it's May. You would, if Warren Buffett runs Berkshire Hathaway, he would never sell Berkshire Hathaway because it's May. Okay, this is just a nursery rhyme that at some point maybe had a grain of truth because 100 years ago maybe traders were on vacation or in the summer, or something strange happened, or some statistician figured out that had worked. But things like that only work until they don't work. And now everyone's heard that. Everybody knows that. It's no longer effective. In fact, JP Morgan released a report that I just was looking at, and it was a 20-year report. It covered 5,000 stock market days from 2000 to 2020. And it showed that about $1 million grew into 3 million if you just bought the S&P and left it, which was a fine return. Million turned into 3 million. If you had missed the 10 best days in that 20-year period, if you hadn't been in the market, you would have only made 1.6 million, which would have been an abysmal return. So instead of tripling your money, you make 1.6 times. And so if you're out in May and you miss one of those days, you're actually putting yourself way behind the curve. So I would say, don't follow those axioms from a century ago. They're a nice little rhyme, but they don't work. They won't make you money.
So what stocks are you watching in the market right now?
I watch a lot of firms, and there's a lot of interesting things happening. I think this is a period where people will look back in the future and just with envy at the opportunities we had. Interest rates are so low, you can't find ways to make very much money in sort of a bond portfolio, but cash flow yields are like 25% all over the place. So you can just make enormous returns. In fact, so one company, I normally don't talk about our portfolio positions, but one that we do really like, and earnings just came out yesterday, is Daily Journal Co. Most people know Warren Buffett and Berkshire Hathaway, but his partner of 65 years, Charlie Munger, is a lot more secretive, and he's running this tiny 400 million market cap firm that has a $300 million equity portfolio. And so it costs 400 million. There's 300 million that he owns in stocks. And this is Warren Buffett's partner. And then he has a SaaS solution business for courthouses. So, it's 400 million today. I sort of expect in 2030, it's like a $2 to 2.5 or $3 billion business. So that's like a 20% IRR from today. You don't have to do anything. There's no taxes. There's no buying and selling. It's a very nice situation, and the downside's super well protected. They've got this equity portfolio run by Charlie Munger, so it's not going down. And it's just amazing that you get this crazy SaaS business that might earn 40 million in earnings in revenue this year, and it basically costs a little over $100 million for that. So you're just getting a crazy business at such a cheap price. So I really like that firm.
Do you have any final thoughts?
Final thoughts. Well, look, I mean, we're in a really special time. Wealth is transferred to the patient during times like this, during crises where you have volatility, and volatility is very high. So volatility can be low and the volatility can be high. And it's presenting folks who understand the fundamental value of their businesses with a lot of opportunities. So I would say just don't be on the sidelines during this booming economy. We're stimulating like never before. The economy, the U.S. economy is opening up with the vaccinations and everything else. it's a great time to be in the markets as a long-term business owner.
Do you have any disclosures? Do you own positions in any of the companies mentioned?
Yeah, well, we actually own a 0.5% of the entire Daily Journal company. So we've been accumulating that for many years. I've been studying the business for about 10 years, and we own 0.5% of the whole company now, which I'm quite proud of and excited about. We'll continue to own that for the next decade. But other than that, yeah, there's nothing else that I mentioned that we own.
I appreciate you guys watching, and be sure to follow us on Twitter at iHub_vision. Like, comment, subscribe, do all the good YouTube stuff, and I'll see you next week.